The bulls made progress on Wall Street yet again as we saw the S&P 500, the Dow Jones Industrial Average, and the Nasdaq Composite all hit all-time highs on an intraday basis. Of course, we maintain our bullish postures across the board from an intermediate perspective. We also saw some interesting movement within the bond market today. Interest rates have been slowly creeping higher, but today had a nice little shot in the arm, even faster than what we've been seeing in recent weeks. We actually ended today at 1.92% on the 10-year Treasury yield, which is the highest level in over 3 months. So we'll talk about all of that, then we'll get into our trade application, which will be on a speculative stock today that is starting the process of filling the gap. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's November 7th, 2019. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe. While you're there, check out our description area and sign up for our email distribution list. We're also heavy users of Twitter. Feel free to follow me at Brandon Van Zee. Also, I really appreciate those of you that click like and retweet on these Market Outlook related posts to support this particular project. Lastly, we do have a presence on Facebook as well. Feel free to join us at the web address embedded in the logo in front of you. All right, with that, let's go ahead and dive into the charts. As you can see, I've got chart 4B pulled up here in front of us. And it's a fun day because we see these nice little green icons lighting up on 3 out of those 4 charts. Yearly high today, yearly high today, and yearly high today. In fact, you could take it a step further and say not only yearly high, but all-time high. And of course, that's a good thing if you're bullish on the markets, which good news is most of you probably are. Of course, there's always going to be a handful of contrarians out there that want to be bearish, I should say, and fight this market. But most of them probably don't stick around too long. If they did, they probably would run out of capital rather quickly. This has been a one-way market for quite some time, and obviously that will end at some point. But the point is, we should not get in the way of the trends. Right now, the trends continue to be to the upside, and so if you are trying to be bearish right here, right now, you're basically, staking your flag in the ground and saying the market's wrong and I'm right. And sometimes you can get that right, but more often than not, if the trend is in play, there is something to that trend, whether you believe it in your gut or not. Try to use your eyes more than your gut in a circumstance like that. So that's kind of where we find ourselves as we head towards the end of the year. I would anticipate more all-time highs, just like we saw here today. But as I mentioned on Tuesday, this particular run that we've been on has been a fairly strong one from a near-term perspective. At some point, that's going to have to give way to a little bit of selling. But again, my expectation right now is not that that selling will wreck the upward trend. It's just that the selling will basically kind of eliminate some of the froth at the top of the market. Right now, we're not really seeing that taking place, but we'll always stay vigilant on that. Of course, we are in earnings season right now, and so any moment, key stocks could come out with bad earnings and start pressuring the market. But for the most part, trends are in place, bullish posture remains in place, and it's all systems go. The only one that didn't hit a multi-month high today was the Russell 2000. You can see it was up today 0.28% to join the rest in an upward day. It's just that it wasn't able to clear its high that it had a couple of days ago right there. So for the most part, another productive day for the bulls on Wall Street. Taking a look now at the 3 green arrow chart. This will be chart 4D. You can see that, of course, no surprise, if all of our markets were up today, we didn't lose any of our 3 green arrow statuses on our charts. Right now, we maintain 3 green arrows, telling those that are looking at this particular philosophy that this is still a good time to be considering trend trading. And so if you need some help with that, of course, I teach a top-down trend trading class on Mondays here at Market Scholars. For those of you that are premium members, feel free to join me, as we always have a great time there. And for those of you that prefer swing trading, of course, I teach a swing trading class on Wednesdays. In fact, today was one of those fun experiences from a swing trading perspective, where the stock we bought yesterday with the anticipation of holding it for the next 3 weeks actually got filled today at our max profit. There's been a couple of times over history we've been able to pull that off, but it's not very regular. So when we get it, we are very thankful for that. So whether you're looking to sharpen your skills as a trend trader or a swing trader, hopefully you'll find something to like here at Market Scholars. But for the most part right now, we continue to have 3 green arrows across the board with all key market indices. From a longer term perspective now, we'll take a look at chart 4C and look at our 1040 crossover method. As you can see, we have bullishness across the board here as well. Seems to be a pattern, right? We're not fighting this market. The market is telling us that we are bullish right now, and we are following in that pathway. So up until the last couple of weeks, we had one little fly in the ointment, and that was the Russell 2000. Over the last couple of candles, as you can see here, again, a reminder that this is a weekly candle chart, so these will be the last 2 weeks worth of candles. We have had a bullish crossover. You can see that nice green color background right there. That represents, in this particular chart's case, the 10-week moving average going up and through the 40-week moving average, which generally is considered a bullish sign. And by the way, speaking of the background colors of the charts, for any of you that are premium members of Market Scholars, if you have a question about chart 4A and what the background colors mean and what the colors of the moving average means, I did answer a question today in our question and answer session that I will post to the calendar here once it becomes available to me. So anyway, if you are somebody that maybe is not as in tuned to our premium classes as others because you've got a busy personal life and all that kind of stuff, today was one of those days where I was able to address, okay, what are we looking at on chart 4A right here? So again, if you are a premium member of Market Scholars, check my recording of my question and answer session from earlier today on that. But point, I guess, of the first 3 charts thus far is we've got bullish postures across the board from a market forecast perspective. We've got 3 green arrows across the board from that particular perspective. And we have bullish crossovers across the board if you're looking at the 1040 crossover method. A lot of bullishness out there right now, and that is a positive sign, especially as we are now entering into a bullish time period of the year from a seasonality perspective as well. All right, let's go ahead and take a look at some 12 grid analysis, starting with chart 5A. This is our asset class 12 grid. And wanted to point out one thing that is, getting a lot of folks chattering here today, which is some pretty extreme movements in the bond market. You can see that TLT was down 1.8% here today and is now touching its 3-month lows. Boy, oh boy, how have times changed here in the last couple of months. Remember, for the most part, at the early part of 2019, we were seeing long-term treasuries going higher and interest rates going lower. Remember that this chart in the lower right-hand corner here on chart 5A is TNX, and that will give you a general sense of how interest rates are acting here currently. And it wasn't too long ago we were all talking about the nervousness in the interest rate market and, seeing all these inverted yield curves and all this. And, here we are waking up in November, and it looks like we are back to a risk-on mentality. Remember, interest rates generally go higher when the economy is stronger. With the general philosophy that eventually the Fed may need to raise interest rates in the short term. Remember, they don't control the long term, but in the short term, due to trying to cool down the economy that gets too hot and starts, creating a little bit of inflation in the system. So it's interesting how quickly the sentiment on Wall Street has changed towards the bond market. But right now, with today's close at 1.92% on the 10-year, that's actually the highest level on the 10-year for interest rates in over 3 months. So interest rates are going up, bonds are going down, and you can see that the background colors are telling us that we have a bearish posture still on TLT, and we have a bullish posture still here on TNX. That was one of the bigger movers of the day. Another thing worth pointing out is that UUP continued to move higher. Now, I mentioned this one on Tuesday as well when I did the video. And by the way, David's been awfully sick here this week, so that's why you haven't seen a video from him. He's really been battling some illness, and so he's been doing his best to try to get some rest, and he's taught a couple of premium classes here or there, but as you can imagine, it's a little bit difficult to get in front of a camera for this particular presentation. So I don't know if he'll be with you tomorrow or not. We'll have to monitor his health, but hopefully he'll get better sooner rather than later. But anyway, when I was doing this video on Tuesday, I was mentioning how UUP had 2 straight days of upside action after producing this oversold cluster signal, and it was my expectation that UUP would fail at that falling moving average. So far, I've been proven wrong, which, by the way, will happen regularly. It happens to every trader. But so far, this thing is holding up above that falling moving average. That was not what I was anticipating. So I want to keep my eye on that, because the US dollar is an important proxy for a lot of other markets out there. And while I don't trade currencies personally, a lot of the stocks that I trade are going to be impacted one way or another by what is happening to the US dollar. So right now, US dollar is showing a bit of strength there, and that is starting to bleed over to the gold market. Notice that gold fell again, and all of a sudden, gold does not look strong at all. It's a little bit disappointing to me, as I was kind of hoping gold would have kind of one of those breakout types of years, and it almost looks like it's going to try to end 2019 with a whimper rather than a bang. And right now you're looking at GLD in a bona fide downtrend, at least if you're looking at the last 2.5 months right here. So price closed at its lowest closing price in 3 months. We now have a downtrending moving average as well. And of course, that deep shaded pink background tells us that we have a strongly bearish posture on gold. And remember, a lot of times gold is kind of viewed as a safe haven. So I don't want this to sound like it's a bad omen or anything like that. It's actually a good thing. When people are willing to sell gold and funnel that money back into riskier assets like stocks, that generally tells us that the risk appetite is strong, and therefore the market, all else being equal, should continue to drift higher based upon that demand for stocks. And that is what you're seeing up at the top of the rung here. Of course, you got US stocks in the upper left. You've got foreign developed stocks as that second place chart up there. And then you've got foreign emerging stocks as that third chart up there at the top. And you can see all 3 of those charts have that deep shade of green, telling us that we have a strongly bullish posture there. And we actually are starting to see the emerging markets take a leadership role. Remember, that had not been the case. When I've been giving this presentation here over the last, let's call it, month or 2, we started to recognize the outperformance of foreign developed stocks over US stocks. That all by itself was a surprise to a degree, because we hadn't seen that for so long. The new development that you'll want to be aware of is that finally the emerging stocks are outpacing the developed foreign stocks. That is also a healthy sign, because if you want to think of it from the perspective of what would be considered the riskiest investment, emerging markets are considered riskier than developed markets, which are considered riskier than US large cap stocks. And so when you see EEM and the emerging markets leading the way higher, that is also taking the temperature of, the willingness for the general market to take risk. And right now, market participants are perfectly comfortable taking a lot of risk out there, and that's generally a bullish sign for the stock market. So, they're selling preferred stocks, they're selling REITs as a result of interest rates going up, and that money is being funneled into more traditional common stocks, whether you're here in the United States or across the globe. All right, let's go ahead and take a look at our next 12 grid. In this case, it's the U.S. sectors 12 grid. And as we pull this up, it's mostly a bullish sign here in the United States. We do have the staples here down at the bottom rung that are showing us some bearishness, not a tremendous amount in the case of the staples, but we are starting to see more extreme bearishness out of the utilities and the REITs. Now you'll note that, strangely enough, utilities are still up over the last 3 months. So depending upon how you're looking at sectors and how sensitive your approach is, the utilities may still be showing up reasonably strong. If your look back period is, let's say, the last quarter or the last year, utilities are still doing well. Really where the destruction has taken place is just in the last 2 weeks, where we had this double top right here, and then all of a sudden we started breaking support levels to the downside. And that, again, kind of goes back to what I mentioned before when we were talking about intermarket analysis. What's happening with interest rates? When interest rates are going higher, all else being equal, you should anticipate that utilities and REITs will struggle. And that's exactly what has played through right here. At the same time, you should anticipate that all else being equal, financial stocks should go up. And lo and behold, financial stocks are one of, if not the leading sector. In fact, they are. As I look at the last 3 months, you can see XLF is up 11.5%. That is the strongest performance out of all of these charts on the board. So what is the gain of financials is the loss of utilities and REITs. And make no mistake, it's not a coincidence. It's because of what's happening with interest rates. So anyway, we are starting to see a transition taking place kind of under the hood. That's one of the things that we talked about yesterday in my factor-based swing trading class, where we're seeing this rotation not just from a sector perspective like I'm showing you right here, but we're seeing it from a factor perspective as well. In fact, if we pulled that up, let's see if we can see any new changes on that right now. Let's take a look at chart 3C here briefly. You can see that value is clearly leading the way to the upside. Clearly leading the way to the downside is low volatility and momentum. Low volatility, remember, is a lot of utilities and REITs. And so when we flip back on over here to the U.S. sectors, that should not come as a surprise. Those are the exact areas falling out of bed right now. So be careful with those low volatility stocks. We're having an unwind of the extreme price movements we saw into those interest rate sensitive areas earlier this year. That unwind could feel a little uncomfortable to the downside as well. So perhaps one strategy was to make sure that you are counterweighting your portfolio to a degree. If you have a lot of utilities and REITs, make sure you're also having some exposure to the financials, because to a degree they can help offset one another when we have an extreme movement like we do right now. But for the most part, you can see here that the more cyclical sectors in the United States still have a very bullish posture out there. Let's now take our thoughts across the globe here and take a peek at chart 5E. This will be our primary set of foreign countries. And these will be stock markets, not necessarily bond markets. As you can see, it's a clean sweep for the bulls here in all of the major economies around the world. So that's a good sign. You know, for a while in the last couple of years, there were times where only the United States was doing well. We were basically standing on an island. It was very strange to me, considering the United States market is the largest stock market on the planet and the most liquid market on the planet, yet we were also, in some eras, the best and strongest market on the planet as well. And you normally don't see that. You normally see the higher beta, smaller countries either have a big move to the upside or a big move to the downside, and you rarely see the United States as, you know, the big ocean freighter out there, you know, leading the way, whereas the rest of the world is falling apart. That was kind of what we saw, you know, in times back over the last couple of years. Right now, we're not in that era. And that's a good thing. And in my perspective, I would rather see strength starting to spread across the globe. And that's where we find ourselves right now. All of these charts look awesome, right? I mean, they're not all perfect. We rarely find perfect charts, but if you're heading into the end of the year thinking you want to be bullish, you want your charts to look like this. Most of these are at 3-month highs. All of these charts have green tails to their moving average, telling us that price is above a moving average. And, you know, most of them are hitting 3-month highs here today, or I shouldn't say most of them, but many of them are within that vicinity, right? We see China hitting a 3-month high today. We see Japan hitting a 3-month high today. We saw Germany hit a 3-month high today. We saw France hit a 3-month high today. We saw Canada hit a 3-month high today. We saw Russia hit a 3-month high today, and South Korea. That's a pretty wide net that we've cast there across the globe. It's not just one little patch, let's say in Southeast Asia, or one little patch in Europe. It's the whole globe. if you're a developed market out there, you've seen a massive rebound heading into one of the more seasonally strong periods of the year. These are very good signs for stock investors. As we look at the secondary markets now, some of these charts haven't looked quite as good. So this will be chart 5G. And you have Argentina down here in the bottom rung, and you have Saudi Arabia off here to the right that are not as strong as what we saw on that past set of 12 grids. Now, it is true, both of those charts are green, but you'll notice they have a lighter green shading. And I've been kind of watching these in the last couple of weeks, and they've kind of reverted back and forth and back and forth. One day they'll show up pink, the next day they'll be green, and so on and so forth. There's not a strong trend developing in Saudi Arabia or Argentina. But as we look at the rest of the charts, things are looking pretty healthy out there. Remember, one of the other countries that was kind of struggling a little bit earlier was Turkey. And I was a little nervous that Turkey was going to ride that moving average lower. I've been impressed that Turkey's been able to break out the last two sessions here. So that's a healthy sign there as well. And maybe we'll start seeing that out of Saudi Arabia and Argentina. I'm not going to hold my breath because it's been taking a long, long time. But on the positive side of the argument, you do see Saudi Arabia closing above its moving average. Now, unfortunately, we need a little bit more evidence than that because it closed above its moving average right here as well, and it eventually sold off. So we're not going to get too giddy with excitement over this, but if a downtrend is ever going to turn into an uptrend, it has to start at some point along the way with price being above a 30-day moving average. And so at least we have a hope and a chance right here with Saudi Arabia. We're not quite there with Argentina, but at least we have that bullish background for the moving average, or for the market forecast indicator, I should say. The other charts, are a little bit more mixed. I wouldn't say that this second group of foreign countries looks quite as strong as that first group I showed you a moment ago, but still, you have some decent looking charts here as well. I would say Mexico is shaping up pretty nicely. Couple of bounce days here in the last couple of days as we approach new highs. We had been talking about Taiwan over and over and over again, and that remains strong, right? It just seems like Taiwan adds a little bit of strength every single day. And you would think that that would eventually stop, but so far it hasn't. This thing keeps on going further and further away from its moving average. So Taiwan remains a stalwart there, and then Sweden also is a fairly strong chart there. Okay. Real quick, before I get to my trade application, I did want to say thank you to those of you that clicked the word like, or not the word like, but the little heart icon there on Twitter for me on Tuesday. I challenged you to get up and over 100, and boy, oh boy, you guys did not disappoint. 114 of you did that. So please, get in the habit of doing that each and every day. David and I look at that every single day to try to judge whether you guys are getting value out of these videos or not. As I mentioned on Tuesday, we put a lot of time and energy into them. Usually takes about 2 to 3 hours out of our day to put together the research and the recording and the editing and the notifications and all the stuff that goes into it. So if we're starting to get the sense that you guys are not getting value out of these videos, then of course we'll find other things to do with our time there. So if you get value out of the videos, we would encourage you, become one of those loyal likers. In other words, every single day, cast your vote and encourage David and I to do these as often as we possibly can. Thank you so much for those of you that stepped up to the plate last time around. Tomorrow, as far as I know, David's going to be having his technical analysis class, but as I mentioned before, he has fallen quite ill. In fact, he's been battling pneumonia and in and out of the clinics and different things like that. So we're all holding him in good thoughts here, hoping he gets well. So it is entirely possible that tomorrow he takes a day of rest. I'm not certain, but for those of you that are premium members, I'm sure he'll reach out one way or another and let you know if he's going to conduct his class. But assuming he's up for it and healthy, he'll be teaching that class at 11 a.m. Eastern time tomorrow. All right, let's now talk about our trade application example for the day. So I'm going to come on over here to... Let's go to chart, let's do 3A in this case. This is my swing trading chart here that we use for our swing trading class, which, as I mentioned, we had great news here on Costco as we were able to lock in our max profit in just 1 day's time as that stock was bouncing nicely off of that moving average in the last couple of days. But today, in this video, I wanted to bring up a more speculative stock, a much more speculative stock than Costco. And this is ticker symbol CARS. Cars.com, I suppose, is what this is. I'm assuming this is an online retailer of automobiles, but let's just see here. Yeah, it says Cars.com owns digital automotive marketplace business. Cars.com is an online research destination for car shoppers. So there you have it. It's an online website for car shopping. But what caught my eye with this was a couple of different things. This is a 3-month chart that we're looking at right here. I'm going to expand this in just a little bit to give us a further look back period. This company did report their earnings here yesterday. It looks like they made 32 cents. And it appears at first blush that the market liked what they saw because the stock was up nearly 5% today. Now, this is a speculative stock. It's a smaller company. And as you can see, it's only a $12 stock. But what I liked about it was, first of all, the reaction from the marketplace. The stock went up after the report. You can see that the background color of this chart turned blue. In this particular chart's case, 3A, that means that the near-term line, this blue line on the market forecast, pointed higher and is giving us a swing trading bullish posture. Remember, that's different than a trend trading bullish posture that we talk about traditionally during this video, which we would use the green line. In this case, we're talking about the blue line. Now, to be fair, the green line is in the upper reversal zone as well. So the green line and the blue line would be considered bullish at this particular time. You'll notice that the market sentiment line is at 18.57 and rising. So while we can't quite call that bullish yet, if it emerges above 20, we would also consider the longest look back period there, the market sentiment line, to also be having a bullish posture. So you can see here that over the last 3 months, this is the highest level it traded here today. It is not only its highest intraday price at $12.92, but it's also the highest closing price here where it closed at $12.74. Now, in addition to that, you're going to see here, if I go back over the 6-month period, that we had quite the fall over the last the last earnings announcement here, where we're down quite tremendously. I'm not sure exactly on a percentage basis how much that was, but you can see that the stock was trading up here near 18 and then fell all the way down here to 12. They did report an earnings of 30 cents there, but apparently they must have disappointed somebody on Wall Street. Now, the reason I'm bringing that up is because it can represent an important marker for our chart. So I'm going to kind of zoom in on that area just before the drop and then over to today's candle. The reason I'm bringing that up is you'll notice that the high point of that gap down day there was up here where it says H colon. It was 1231. So right here at the peak was 1231. You'll notice today we have now breached that level at 1274. So one of the theories of technical analysis is that when you have a gap down, the expectation is that the gap will hold. In other words, now that we've gapped down, price should not get above this particular candle. Now, if it ever does, like is what is happening today, then your expectations as a trader start to change, and then the assumption is that you'll get a gap fill. Speaking of gaps, I heard Gap's stock price was down here after hours tonight after their CEO was stepping down. So Gap should have a gap tomorrow. This is a different type of a gap here on Cars.com, but now that we're starting to get above that price candle over there, some traders are going to start setting their eyes on filling that gap up here to this candle. In other words, some traders might be betting that Cars.com will get back up to $18 per share. Well, will that happen or not is anybody's guess. Obviously, you're always taking risk with every single trade that you're going to place, but it's a relevant enough consideration in a bullish time period like right now, while we're seeing a stock starting to rebound and form a nice bottom and head higher, that we can place a trade based off of that. Now, because this is a very speculative trade, I'm only going to do 100 shares on a $13 stock. So I'm not going to take a lot of risk on this, but I just wanted to highlight the concept more than anything from an educational perspective. And so what I'm going to do here is I'm going to get my calculator out. I'm going to take today's closing price of $12.74, and I am going to subtract from it where I want to place my stop loss. In this case, I can see that the lowest price of this chart was 823. So I want to give myself a little bit of wiggle room below there. In other words, I'm making the bet that this thing will not breach a new low. And if it does, then I've got to be willing to admit that I was wrong and move on with a stop loss. So let's put our stop loss in this speculative case at $7.99, just a penny below a nice round number of $8. So if we took $12.74 and subtracted out $7.99, that means that we are taking on $4.75 worth of per share risk between where we'd be thinking about buying it here versus where we'd be thinking about getting stopped out, basically right down at this level. Now, if we take that per share amount of $4.75 and now add it back to the closing price here today of $12.74, that can project what our price target is above us, which is $17.49. Now, $17.49 on the chart is right around here. And you'll note that that is just a hair below where that gap fill would be taking place. In other words, we've got a couple different things working for us here. Of course, we got our bullish posture in multiple ways. We've got a 3-month high in terms of the stock price. We've got the start of a gap fill. And if that is going to happen, then that means that we would be able to liquidate our position at a profit before that gap gets filled, because here the lowest price was $17.91. So we would be getting out, a good, call it 50 cents or 40 cents or whatever prior to that gap fill taking place. So if you believe that this stock is in the process of filling its gap, then you'd also believe that you'd have a good chance of locking in profits on this swing trade as well. So in order to place that trade, I am going to right click on the chart. So let's just right click and go to buy custom with OCO bracket. What that means is one cancels other. And what it's going to do is it's going to basically, once your trade is filled, your original buy trade here, it's going to push a trade into the marketplace where one of these two things will happen. Either you'll get sold out at a stop loss or this position will be sold at your price target. So in this case, on the buy part of the trade, I am going to put it at the price that it closed at today with the hope that it opens at that same price tomorrow. So $12.74 is where I'm hoping to buy this. On the upside price target, I mentioned before that I calculated 17.49, and I'm going to put that in there as a good till cancel order. Directly below that, where it says day, I'm going to also change that to good till cancel. That's going to represent our stop price, and our stop price itself is going to be at $7.99. Now remember, this is not going to happen anytime soon because those are some pretty wide swings there from a percentage basis, but it does allow you to step away from your computer. It's basically saying, okay, one of those two things is going to happen. Either this stock is going to eventually go to $17.49 or it's going to go down to $7.99. And this particular trade is kind of designed and set up to take care of you one way or another. So I'm going to go ahead and click confirm and send and ship that off, and we'll see if we can get filled on that tomorrow. All right, well, thank you for joining me here yet again. We do have another bullish day on the market, no surprise, because our posture has been bullish for quite some time and continues to be the case here. Now, don't be surprised if we get a little bit of a breather or a little bit of a pullback, but for the most part, our trends remain well intact here. It looks like everything that we covered tonight means that risk appetite is very strong within the markets, and we're looking for new bullish positions and new bullish setups like we saw here with my speculative trade tonight. If you got value out of tonight's video, please go over to Twitter, click like for me, and like I mentioned, it's possible David might not be available for you tomorrow. We'll just have to check in on his health, but we would plan to see him, of course, next week, assuming everything goes as planned. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.